Of the biggest market stories from the past week. Join host Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Serin, and I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap on Friday, June 10th, 2022. I am, of course, joined by my wonderful co-host, Bruce Campbell with Stonecastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's good to be back after a few weeks off.
I've had a few weeks with the company of Jordan Ewell. It's always lovely to have him around, but I have missed you, so I'm happy to see you. He has no answer for that one. He doesn't miss me back. That's okay, Bruce. Okay, we're going to jump right into it. There's obviously a lot going on in the market. There's been a lot going on for some time and probably for a little while longer. We're going to talk about what happened with inflation and what the Fed's going to have to do to deal with that. We're going to talk about consumer confidence. It's not doing very well, and I think understandably so. We're going to talk about potential opportunities for patient investors and what they might be wanting to do to implement during these markets. And then, of course, we'll end off with some CSE issuer news. So as far as inflation in the Fed, I'm going to let you dive into it, but the U.S. inflation accelerated to a fresh 40-year high in May. 40-year high in May. There's a lot of people out there who are too young to even know how bad it was the last time, but they're about to get a swig of it. A sign that price pressures are becoming entrenched in the economy. So what's going on, Bruce?
Yeah, I mean, this was, this is certainly the most anticipated economic release for June. And, there's been all kinds of people speculating on whether it was going to be hotter than expected, not. The expectation was been ratcheting up, and there was like back to whisper numbers. There was a whisper number that was even higher, and then the number that came out was even higher than that. As you mentioned, 40-year high going back to the 80s. And I mean, that was the big fight back in the 80s was, Paul Volcker, who was the Federal Reserve Chairman back then, was trying to break the back of inflation, which is a lot what Jerome Powell is trying to do right now. And this is by ratcheting interest rates. And of course, the market started to sell off yesterday based on the concern that people were worried about this inflation number coming in higher than expected. Market sold down. Today, same thing. We're seeing, the market dropping, and we're seeing fairly significant volume to the downside. So the last I checked, it was about 19 to 1 in New York Stock Exchange, downside volume to upside, which is very skewed. Typically we talk kind of 9-10 to 1 is definitely skewed, and so 19 to 1 is way skewed. And that's just because people are worried about what that means for consumer confidence, for spending, for the economy, for interest rates, and all that's uncertainty that the market doesn't like.
Yeah, absolutely. And I think what's going to have to come from this, obviously, is pretty aggressive moves to try and resolve it. And the aggressive moves have, their downside to them, right? So the more aggressive we have to be, the more other sides of the market will suffer. Is that right, essentially?
Yeah, that's right. I mean, the Federal Reserve next week's coming out with their meeting, and everyone's anticipating that they'll do at least 50 basis points. But now with where inflation is, there's people calling for 75 basis points. There's people calling for 1 full percentage point for them to actually get in front of this and start to see those numbers fall off and see slower inflation. Personally, I think that, we're probably going to see that fall off because, the interest rate increases that have already happened take a little while to have an impact, one. And two is if you look at the year over year comparisons, April, May, and June of last year, we saw this most significant upside to those numbers. And so if we're looking at it on a year over year basis, if the rate of change isn't as fast from last year and now, possibly gets slowed down, maybe the July number is a bit better. I mean, maybe that's just optimistically thinking, but, that could be the case. And whether or not the Fed makes more than a 50 basis point change next week will be interesting to see. There's some people thinking that if they went 1 full point, so 1% higher, that we might actually see the market rally because they would think that the Fed was getting in front of it as opposed to, kind of still chasing that bus down the street.
Okay, I don't know if you know this, but I just want to ask. The last time this happened 40 years ago in the 80s, do you remember if it was Republicans or Democrats in the White House?
Yeah, I wouldn't have a clue.
No, I'm just curious because
Yeah.
obviously there's some political elements to this too of how they handle it. So we'll just hope for better June and July. On that note, on that lovely, wonderful note, let's talk about consumer confidence. Consumer confidence, just to remind people, is a statistical measure of consumer feelings about current and future economic conditions. Rightly so, it's not great right now. What's going on?
Yeah, I mean, inflation's hitting people in the pocketbooks, right? So if you get any type of just fixed salary, it's hard for you to keep up to what's going on with prices. If you look at the biggest impacts are energy, food, housing, and all of those have been increasing at a tremendous rate. No one can go to the gas pump without noticing that it costs a lot more than it did, earlier this year, and certainly from a year ago. You can't go to the grocery store without noticing that food prices are more expensive. Rents are going up. If you look at, housing, it's still, even with rates going up, housing prices have still stayed really high. So that's affecting the consumer. And, when that's happening and it's out of control and there's no end in sight, their wages aren't necessarily keeping up, then, they get concerned. Their sentiment is very negative. And, we're seeing that the lowest level since that was started. The University of Michigan consumer sentiment was started back in the 70s. So, again, high inflation back then, it was down, kind of in this level, and now we're down below that level here, again, because of inflation and the impact it has on purchasing power that people have and the ability to save and not have to dip into the, savings or use a credit card to make ends meet.
Absolutely. I mean, like you said, it's funny. It's been happening for a little while, but I think we all maybe all of a sudden are starting to feel it. And like you said, just going to fill your gas tank and going to the grocery store and so on and so forth. So, so hopefully we get through this and it changes. Let's talk about on a potential good note. You are telling me that there is an opportunity for patient investors. So hopefully there are lots of patient investors out there. What's the opportunity?
Well, right now the headlines are so gloomy, right? Inflation's high, Fed's raising rates, uncertainty here, uncertainty there. But the reality of the situation is that it doesn't last forever. Of course, no one knows how long it lasts, but there is an opportunity here. We're in the middle of the midterm election year. And if you historically look at data on midterm election years, it's the weakest year of the 4-year presidential cycle in the US. The US markets tend to lead a lot of other global markets. So we can kind of look at that as far as direction goes. And interestingly enough, June is the worst month in the midterm election year of any months. And so, we're seeing that dip, that pullback right now. If you're a patient investor and you're looking out, 1 year, 2 year, 3 years time horizon, you have cash on the sidelines, now is probably a great time to be looking at moving into the markets for sure, because the fall comes, and after the midterm or just before the midterm elections, market starts to rally. And then year 3 and 4 are the strongest years of the presidential cycle, because that president who's in place is trying to get reelected or get his party reelected. And so they tend to, do a lot that's powerful for the economy. So as you can see from the chart here, the bar in June is the largest to the downside. And then, we have sort of meander around in the July, August, September, and then October, November, December are strong. And looking out into the 3rd and 4th year, they're both strong as well.
And I feel like I say this every week, but I'm going to keep saying it so people understand, there is opportunity out there. But this is where you really, professional advice is very important, because, advisors such as yourself do your due diligence. You understand that the fundamentals behind the company don't necessarily match the downward pressure on certain stocks, and that it's worth holding on to them, and that you'll continue to watch them. So it's not even due diligence practices, it's a regular check-in with what's going on. So these are really important times to get that professional advice, also how to situate your portfolio, how much cash versus maybe moving into some more safety, and how long you need to do that. So please make sure you're getting professional advice.
Yeah, and the one thing when we look at our portfolio, we're we're shocked in a lot of cases that, companies continue to have better fundamentals, and, the stock prices either don't do anything positive or they go in the opposite direction. And that can be very taxing on the emotion, but that's why the professional advisor is really important, because they've been through it. They know cycles and they understand that, it's not necessarily going to go to zero. If you have not a strong company, that's possible. But like, if you have a strong company, the stock price will pull back. Meanwhile, the fundamentals can continue to improve. That's very hard on the emotions, thinking that, oh my gosh, it's just only going to get worse. And, we can look at a lot of different data to show you exactly why, you want to stay with your investment, or you want to sell your investment, or you want to look at adding to your investment.
Absolutely. Absolutely. Okay. We're going to talk about, of course, some CSE issuer news. I'm not talking about any particular issuers today, other than it's PDAC time. It's normally in March, but we're doing it in June. We just celebrated our annual CSE PDAC in Toronto this past week. I think it was a huge success. I'm getting my bags packed and heading to Toronto this weekend, and the whole team is going to be together. So first of all, just want to let everyone know, I was kind of surprised with the markets the way they are, but there is a lot of people heading to Toronto for PDAC. If you are in the Toronto area next week, please make sure that you come down. Issuers are all out there. I know that there's been a lot of effort put to get together. This is the first time we're together in 2 years. The last PDAC we were together at, we came home and the world shut down. So it's a reunion tour. Next week, we do have CSE events, so make sure you check out our website and you can find out what events we are hosting. The one event I'm particularly excited about is we are going to be putting on an information session. There is, now, Bruce, you obviously know what a 43101 is, right?
Yeah,
I
for
would
sure.
Yeah. All of our viewers know, what a national instrument 43101 is. There's proposed changes to this legislation. And so we're going to be getting together on Tuesday after our annual investor luncheon, and we're going to be talking about what those proposed changes are. So I just want to, for those of you that might not know what this technical report is, this is a technical report required for public companies to have a qualified person do a technical report on their properties if they're in the mining space to be able to go public. And for some of you, Bruce, were you around when BRIEX happened?
I was, yeah.
Yeah. Were you in the markets?
We were, yeah. I was. Yeah.
So for those of you that remember BRIEX or not, 43101 was created after the BRIEX scandal. It was the largest scandal in Canadian history in the markets. The gold reserves at BRIEX were alleged to be 200 million ounces, or up to 8% of the entire world gold's reserve at that time. However, it was a massive fraud. And there was no gold. The core samples had been faked by one of the geologists, and an independent lab later claimed that the faking had been poorly done, including the use of shavings from somebody's gold jewelry, literally shaved it into some samples. In 1997, BRIEX collapsed and the shares became worthless. Again, the biggest stock scandal in Canadian history. For this purpose, we created Canadian legislation, which forced, mining companies to create this report with a qualified person, and it's a fairly lengthy report and quite technical. So the CSE has come out and proposed some changes to this report. So if anyone's in the mining sector and in Toronto next week, I strongly encourage that you come. It's out for public comment. And so if you're a shareholder in mining companies, or if you're an issuer in the mining sector, this will affect you. So please come check it out. We will make sure that we also have some of this content put on our CSE TV afterwards. We also have our annual investor luncheon. We have a reception there. We have a booth. We will be in the booth. The whole team will be there. If you wanted to reach out and see us, we will be around. On that lovely note, Bruce, is there anything we should think about going into next week other than PDAC and mining?
Well, yeah, beyond PDAC, the Fed, obviously, that's going to be on a lot of people's minds, especially as we roll the corner into next week. That meeting will be, I believe it's Tuesday and Wednesday, and then they'll make their announcement on what they're going to do with rates, and that'll have a big impact. And also the market's reaction to that. If they go 50 basis points, is the market going to think they're still behind the curve? If they go 75, does that make people happier? And 1%, is that positive or negative, right? This will be the really interesting part, is that, not only what the Fed does, but how the market reacts to it and what the perception of that move has been to the market and whether or not they're getting their handle on inflation or not.
Well, we'll keep watching. Listen, Bruce, it's so nice to see you again. I will be back from PDAC next week for next week's market recap. So I look forward to seeing you next Friday, and have a wonderful weekend.
Great. Yeah. See you next weekend.